please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Sudarshan Sukhani, Mitesh Thakkar and Prakash Gaba with us for the technical trades this morning. It's going to be an important day, of course, because the signals are all over the place. If you look at the Asian markets, it's telling you that perhaps there could be a bit of a gap down. Though the SGX Nifty is now recovering quite a bit, down only 16 points. We had a big decline yesterday, keep in mind. Good morning, Sudarshan. Would you be tempted to buy the minor gap down considering yesterday's decline and the range bound nature of the market, or are you sensing a bit of a breakdown here?
Yeah, good morning, Anuj. I think we are looking at a lower level, and Friday could be a day when markets again become choppy. There may be a small intraday rally, and that rally should be sold into. Bearish patterns have now been confirmed in the Nifty, and this is a corrective decline, so it will be choppy. But the view is that for the short-term trader, next 3 or 4 days, we should be looking at lower levels, maybe till 10,600 at least. So rallies should be used to short sell.
Okay, rally should be used to short sell. That's actually the feedback we've been getting from a lot of traders. So let's ask the others as well. Mitesh Thakkar and Prakash Gaba also with us. Prakash, would you concur that once this market, if it does move up higher, then it's better to short?
Certainly. Good morning to you, Sonia. In fact, I've been maintaining since Monday morning that 10,822 is a very, very stiff resistance to deal with, and my bias was down. Still maintain the bias is down. You might see if we get an up move up to even 30-40 points, that would be a shorting opportunity. I think downside is possible if it breaks the lower levels. Perhaps we could even see levels closer to 10,685 on the Nifty. And when I look at the Bank Nifty, exactly same is the case. It's more weak out here. We can see that the stiff resistance, even 75 points up from here. And downside is open. Looks like if we go down, then maybe next week could see levels closer to 26,400 zone. So when I look at the charts, Nifty and Bank Nifty, both looks weak to me.
Okay, we have two bears in the house then this morning. Mitesh, good morning. What's your sense? Are you also looking to short?
Good morning. I'm open to shorting, Surabhi, but I think, clearly we have seen 10,700, 690, 680 zone as some important support area. So maybe once we start breaking below that, and that could be today or tomorrow, I think it will be a good shorting opportunity. Otherwise, it still is a very choppy and a range-bound market. I don't think we have the strength to get past 10,830, 850. The indicators are very flat, and 10,700, 680 remains the support. But yeah, in case we start dropping below 10,680, that will be a good shorting opportunity.
Okay, Mitesh, good mornings. What about individual stocks?
Yeah. So I have a mix of buys and sells, slightly more bias on the sell side. L&T Finance is now showing signs of a negative breakdown. So sell with a stop at 164.25, look for targets of 154. Buy on ICICI Bank, where yesterday we saw a lot of positive crossovers happening on the indicator side. So keep a stop below 293, look for targets of 310. Kajaria Ceramics broke support levels. That's a sell with a stop at 518, look for targets of 485. A buy on Reliance, which made a fresh high. So keep a stop at 1013, look for targets of 1065. And Axis Bank is something which we had a sell call yesterday as well. The indicator continued to expand on the negative side, so that's a sell with a stop at 520 half for targets of 500.
Okay, sell calls increasing on Axis Bank lately. Interesting there. Prakash, what about you? What would be on your list today?
I have all 4 sales. I was trying desperately to get some buy, not very comfortable with the buy zone, so I got selected all 4 sales here. And they're on mainline stocks. Bajaj Auto looks weak, more of a tired pattern out here, more of an exhaustion pattern here. We could see a sell to maybe around 2790. Stop about 2855. Pidilite, yesterday Anuj was speaking about it. Yes, it looks weak, and we can see maybe a slide around 1000. 1000 seems to be a psychological support. I hope it holds there. Stop about 1051. Tech Mahindra is looking weak. More of an exhaustion pattern out here. A slide to 672 possible. Stop about 691. And finally, Vocard. That looks weak as well. A breakdown pattern out here. Possible targets in the downside, 660, stop about 690.
Okay, plenty of sell calls. Sudarshan, when you said that you're looking to short, does that apply to both the Nifty and the Bank Nifty, and of course your trading calls for the day as well?
It applies to the Nifty. The Bank Nifty is not yet a shorting candidate. It's relatively outperforming, so it's best, while it won't be left alone if the Nifty comes down, which I think it will. It's better to focus on the weaker index, so that's the Nifty for me. But stocks are likely to have a mixed performance today. So I have buys and sells both. Among the buys, Tata Elxsi from the mid-cap IT space is yesterday it made a narrow range day. It could be breaking on the upside. It's an intraday trade, but could be very interesting for long traders. Similarly, Hind Petro is also a buy. A trading range that has lasted for almost 3 weeks is on the verge of breaking on the upside. It could have very strong momentum. And the current favorite ICICI Bank, where another buying opportunity presents itself. I have investments in ICICI Bank. I'm also an investor. 2 short sells relatively easy. BEML, where the stock price is simply drifting day after day, and NBCC, where new lows are consistently being made. So it's going to be a mixed day today, but the index is a shorting opportunity.
Okay, you spoke about ICICI Bank. In fact, I was going to come to you, to ask you about that because it is the biggest gainer this week. It's up almost 6%. Sudarshan, for someone who's perhaps missed out on this trading pop, do you still expect more? I mean, you spoke about being an investor there, but for a positional trade?
I think there's more upside here, which is why we are also leaving the bank nifty alone. Independently, ICICI Bank could go up while the whole market becomes choppy and actually falls. So yes, there is more upside.
Okay, Mitesh, the strongest stock in this last couple of down days has been obviously Reliance. Would it be good for more? It's of course one of your picks. And is that just intraday, or I mean positionally also Reliance is perhaps something that you would advise on the long side?
I think I've covered it for the next few days, looking at a target of 1065, but I would be very comfortable looking at a slight positional trade for a few weeks as well. I think Reliance, if you see the last few months of movements, it's been doing this range of about 1015-20 on the upside, to about 920, 900 on the downside, and that range appears to be breaking on the upside. So my sense is that next 4 to 5 to 6 weeks, unless until we see a reversal abruptly, I think this stock should possibly head towards 1100 plus levels.
Okay, all right. Thanks, gentlemen, for joining us and talking about all of those stocks. Let's move on to a CNBC TV18 exclusive. My colleague Mangalam caught up with the recently appointed CEO of VIP Industries, Sudeep Ghosh, and began by asking him where he hopes to take the company and his outlook going forward. VIP, remember, has been one of the big wealth creators in the last couple of years. Take a look.
VIP as an organization has been very, very stable in the mid segment of the market. So any range from 3,000 to 6,000, we've been very, very strong. We have almost 7 to 75% market share in that. But the price points above 6,000 and price points below 3,000 is something that we are not been strong. Below 3,000 has always been the unorganized players, and above 6,000 has always been Samsonite. So this year and couple of years from now, we would like to get that segment into our fold. That would help us to be a complete dominant player in all segments of luggage in this country. And that is what I meant to take this organization to the next level, because we are as it is #1 luggage brand in the country. We want to be #1 luggage brand in every segment in this country.
So basically, when Mr. Piramal earlier spoke with us after the fourth quarter numbers, he said VIP is like the Maruti of the luggage industry. Your aim is to make VIP not only the Maruti, the Nano and the Mercedes of the luggage industry.
Absolutely, absolutely.
All right, fair point. So let's put numbers to that. You did revenues of close to around 1,400 crores in the last fiscal. 18-19% CAGR over the next 3 years would take it to 2,000 crores by 2020. Is that a possibility?
Yes, yes. That's definitely a possibility, and something that I think could be achieved.
The company has seen a net profit CAGR of 30-32%, and he sees no reason why this won't continue into the next 4 or 5 years. If that happens, your net profit from what 128, 129 crores goes up all the way up to 500 crores in the next 5 years. Is that an achievable target, or is that an aspirational target, or is that unrealistic?
As I said, if the sales go up, the profits go up. That's just as simple formula as that. So there is, we can definitely achieve the percentages that our chairman said. The whole segment that we are targeting, which is above 6,000, is a segment that we have never operated. We have launched something called the Carlton Edge, wherein we have started selling products which starts at 12,000 and ends at 25,000. Those are high volume, high value products for us. The moment we do start doing volume in that, immediately the EBITDA starts looking better for us. And I think it is absolutely achievable, and I don't see any reason why we should not.
In that case, what happens to your margins?
Actually, the margins are on pressure a little bit because when the dollar is getting stronger and the rupee getting weaker. As I said, the only advantage that we have is now people have started paying money for the products.
Okay.
So price increases will happen, but the advantage is people do not cringe to pay money for a good luggage, and therefore we will protect our margin through price increases and through finding ways of manufacturing products where the costs will be under control.
So 8% is the price hike that you roughly took all of last year across tranches. Is that kind of quantum expected in this year as well?
Yes, could be between 5 to 8%. That's something that we definitely plan to take, and could be a little more also, because depending upon how the dollar behaves.
All right. So in that case, where does competition come in? Because at the lower end you have Safari, which is relentlessly competing in that segment. At the higher end, you said there are the Samsonites of the world. Middle level also, I mean, there has been the relaunch of American Tourister. Will you be able to take the 5 to 8% hike as well as hold on to your market share?
I've never felt the competitive pressure when it comes to price hike. Our distribution is very, very strong. Our brands are very strong. I think Samsonite is number one in everywhere else in the world except for India. We control almost 60-65% market share wherever there are data points available. The modern trade, which can give us data, that is where we find that we have more than 60-65%.
But aren't competitors edging into or eating into your market share?
They've been trying for the last 5 years. They've not been able to.
So you've gained market share in the last 5 years?
Of course.
How much?
Absolutely. So we would have been about 50-52%. We have definitely crossed 60% in the last 5 years. So I don't think getting market share is a problem.
Okay, very aspirational goals there from VIP Industries. They hope to be one of the biggest. We'll take a short break on that note. Abhimanyu Sofat of IIFL will join in.
Welcome back. There's a slight recovery across Asia. Some fight back underway in markets like Hong Kong as well as mainland China, which is why you're seeing the SGX Nifty. Look at that quick recovery on that index. It's now almost flat. We were looking at a deeper cut when we began the show. So let's see if this trend can actually materialize when we kick off our trading action as well. Speaking of trading, let's get some trading ideas going. We have Chandan Taparia of Motilal Oswal Securities joining in. Good morning, Chandan. What's on your list today?
Yeah, very good morning. First, talking about the stock specific, market got stuck in a range, so very selective stocks are likely to do well. But we have selected the counter which has comparatively potential to outperform or holding the long position. So first it is buy on Glenmark. This stock is up by around 12 to 13% on the entire expiry and trading higher than its volume weightage average of 575. Overall, it is making higher tops, higher bottom formation, and gains are respected even after the market limited upside momentum. It is forming a positive price pattern. Longs are intact in the counter, which added in the last week by around 20 to 25%. So that is indicating the extension of further move. So recommending to go long with a stop loss of 585, and Glenmark has potential to move towards 630 kind of level in next couple of trading sessions. Second trade is on oil marketing company. After the consolidation of last couple of trading sessions, we have seen the buying interest and surge in the open interest activity in most of the oil marketing companies. BPCL has seen jump and has been respecting its 50-day exponential moving average from last 10 to 12 trading session. It seems that now some positive action could be seen led by short covering activity, and its stock has potential to move towards 433, 434 kind of level. So here one can trade with 420 call by putting a stop loss of 5 for upside target towards 20. Some volatility could be seen because of the OPEC meet. That's why we are trading option then taking a future position right now. Third trade is sell on PNB. We have seen selling pressure in most of the PSU banks. After the small bounce back in SBI or Canara Bank, most of the stocks started to underperform and adding built up of short position again. Most of these stocks have broken immediate support trend line. Shorts are intact with call writing activity, so expecting most of the PSU to underperform or witness selling pressure. So PNB is a sell call from our side. This stock has potential to go down to 77. One can sell with a stop loss of 86. And one more option strategy in the Nifty is that ratio bear put spread. As per the price pattern, it seems that market is finding multiple hurdle near to 10,800, 10,835. Until these levels are not decisively surpassed, upside seems to be limited. So we are recommending to be with ratio bear put spread to hedge the downside till 10,600 kind of level. So the strategy is buy one lot of 10,750 put, sell two lot of 10,600 put. Cost for the strategy is 20 points, and if market goes down, then we'll get profit of around 100 to 130 points.
Okay, Chandan, thanks a lot for joining us. You have a good day. But moving on, this is our ongoing series, SEBI's Watch List, the segment where we focus on stocks that are currently in that additional surveillance measures list and try and demystify them for you. Sonal joins in now, and the stock on our radar today is Apex Frozen Foods. It was once upon a time a darling of investors. Sonal, over to you.
Yes, the darling of investors, and rose around 3 times in 2017 after its listing. But in 2018, it saw some declines, went down by 46% on the YTD basis. And in this month itself, it has seen cuts of around 19%. But what does the company really do? It is an integrated producer and exporter of aquaculture products. And the company has 100% revenues from exports. In terms of capacity, right now, the company is working at optimum utilization at around 93% and is coming up with more capacities of around 20,000 tons per annum in the shrimp processing plant, and also has a leased capacity of around 6,000 tons per annum. They also have a cold storage facility which is nearing completion, and the company expects all of it to get started by Q2 of FY19. In the hatchery business, the company has commissioned a new hatchery in FY18, and that has taken the combined breeding capacity to 1 billion SPF seeds, and companies planning to come up with one more, and that will enhance the capacity to 1.4 billion SPF seeds in coming years. Now, if we talk about the realizations, if you'll just go through the chart that will come up for you, the shrimp prices, they firmed up in first half year of FY18, but they started slipping in Q4 of FY18. However, they were flattish because of stronger dollar, because 100% of the revenues are coming up from exports. But the company says that the outlook for the shrimp prices remain positive. But of course, there are some key risks that the company will be facing. That is the imposition of fresh import restrictions by United States, because 80% of the revenues are from the United States of America. Also, if there is higher supply from Vietnam, Thailand, that is the competitors from where there is supply of shrimps. Also, the top 5 customers, they contribute to close to 70% of their revenues, and there has been quite a lot of volatility in the EBITDA margins and the return of net worth of the company. Also, there is high vulnerability to the external disease outbreak, which actually could pose some threat on the company. But let's talk about peer comparison then. Avanti Feeds is one company that is a peer to Apex Frozen Foods. Apex Frozen Foods just touched that 1,000 crore revenue mark in FY18. In comparison to Avanti, it is smaller in numbers of revenue, also in margins. And in terms of valuation, slightly higher in terms of valuations. So we'll look out for that stock, how it performs in coming times. Back to you.
Okay, thanks a lot for that, Sonal. So that's a stock. Just doing a check on the abnormal price movement there and giving you the fundamental facts. Abhimanyu Sofat, the Vice President of Research at IIFL, joins in now to talk about all of these stocks and more. Abhimanyu, hi, good morning. The stock of the week has been ICICI Bank. It's gained almost about 6% this week. How are you positioned on that now from a long-term perspective?
So ICICI Bank is one of our top picks among the larger caps because clearly we feel that the issues related to the CEOs are a bit overblown, and going forward we expect a strong improvement in terms of numbers going forward. If you look at the valuation of the company after adjusting for the stake in subsidiaries, I think so it's trading at close to around a 50% discount to Axis Bank. So once we see an improvement in terms of NPA numbers going forward, clearly this particular bank should do well going forward. In terms of valuation, it is trading at around 0.9 price to book adjusted for the stake in the subsidiaries. So I think so it's a pretty good stock to own at this particular point.
Okay. Abhimanyu, this morning, one of the foreign brokerages had an interesting call on Gail. They're calling for upside because of higher spot LNG prices, and maybe the residual LNG can be sold in, at those higher rates. So therefore, they're bullish. What's your view?
Yes, so there could be a potential upside of around 8 to 20% on this unsold inventory which is there with Gail. Clearly, the government focus on the gas sector has been there, and going forward, as we see investment happening in this particular sector, Gail should be a beneficiary. The only thing is that from a valuation perspective, it is not very cheap. So we have more of an accumulate view on Gail at this particular juncture.
Okay, we do one thing. We take a short break. We'll come back with the pre-opening rates and lots more on the market. Mr. S.P. Tulsian will also be with us to analyze all of the fun.